All right, hello, good evening. Okay, good evening, everyone. It's me, Kelvin from Round and Search. Before I start, let me do some sound check here. Seems like not sure whether you guys can hear this or not. Yeah, I think should be fine, I guess. If let's say you give me a thumbs up, like the page, or maybe leave a comment. You let me know if let's say you can't hear it or you can hear it. If you can hear it, yeah, give me one thumbs up or just let me know in the comment section. Okay, it seems everything is fine. Let's see, where do I see the comments here? Okay. All right, so let's start. Okay, good evening, everyone. I'm Kelvin again. So thank you for joining into our live stream session. So today, what I'm going to share with you guys is about the Chinese New Year bull run. So it's not about the whole market that is going into a bull run, but it's more about, if you notice it, most of the time, during the festive season, like Chinese New Year or maybe Hari Raya, usually people will take a longer break, 1 week break, right? So you will see a lot of people, you will see a lot of stocks that they have uh, move up higher or they move up very fast within that week. So you can call it like a star stocks. But of course, today I'm not going to share you the fish, but I'm going to teach you how to catch the fish. All right. So don't get disappointed. All right. So there will be some things that is more very interesting about it, and you will understand more about the stock market, and you will also understand why most of the time when we use the technical analysis is not working. All right. A bit of introduction of myself. Probably some of you joined in from halfway in, or maybe you have not seen me before, or you're not our subscriber or the Facebook followers. So myself, I started off by looking into fundamental analysis because my background is actually economics and finance. So I took whatever I learned from the school, from the uni, and then apply into the stock market. But I find that the something that is not right is where fundamentals sometimes it doesn't reflect the stock price. So that's why I look into technical analysis. But when I start to look into technical analysis, I find that there's a lot of guessing and about like probability. It's more about the game of chance. If let's say we are using technical analysis, why do I say that? Because it's always about resistance breakout or any indicator signals that comes in, and then we entry. After we enter, and then we place our take profit target and also our cut loss point. If let's say it doesn't hit our take profit target and the price start to retrace down, then we have no idea what to do after that. So that's why I find that it's not so reliable. And slowly, when I look into I understand that the stock market, it has been like for many years, a lot of people will always say that the stock market are the place for the big boys game. So that's why I look into the big boys, not to say like associating with them, but just look into the transaction data, or one of the common way or words that people talk about it in the stock market is tape reading. So basically, I spend a lot of time looking into the transaction data, doing day trading, and at the same time going through the whole list of KLSE stocks, thousand over list of stocks. So from there, I start to look for those stocks that right now the price has already moved up higher, and then I look back into it and find what are uh, the similar price movement that they have, and then slowly through years of experience look into it, and then after we apply into the market, we find that the stock market, we still need to follow the big boss. So looking into the transaction data, understanding what is their intention, are they doing this kind of transaction to attract the buyers, or whether the big selling transaction from them is actually trying to shake out some of the seller before they push the price up higher. Buy sell queue, how do they place the buy sell queue that tell us that they have the intention to move the price up higher, and before they push or they mark up the price, usually you see a lot of star stock like they rocket up like 100%, 200% sometimes. So all these things before they mark up the price, there will be a operation of, some of you call it accumulation, or some of you will call it the more in the industry, a lot of people will call it the warehousing, which they are collecting those shares. So they need to collect the shares at the lower price, and then they mark up the price, and then do a lot of marketing, such as like releasing news reports, or have some people or speakers talk about their stocks, or right now even they share in the Telegram channel, or maybe some of the groups that spread out this kind of news to have more retail investors to come in to buy the shares, okay, so that they can take profit. All right, so that's why I don't really look into support rebound, or maybe a drop. I don't look into drawing a support line or the resistance line. The reason is because I find that you can't use the previous support or previous low as the current support, or the point that the big boys will come in. Because if you understand how the big boys work, is that they will mark up the price and they will take profit on the way up. Because they have a lot of shares in hand, they can't sell everything at one price or at the top of the price. So they need to release their shares bit by bit on the way up. And that's why you will see when the price is moving up higher, you will see that there will have a price retrace. So that is the reason why there is a retrace, or the price will have a fall from it. It's not because some of the speaker, or maybe some of the analysts will say like, oh, okay, because it's a long bull, that's why the bull need to take some rest and then before they move up higher. So this thing you don't really see a lot of people understand why is there a price retrace, or maybe because they are not allowed to say that. So what I'm telling you guys here is that what I understand about it, because most of the time when the price they have a retrace is because they push up the price. When they push up the price, the big boys by the big boys, and then the retail investor will come in. They will see it. Once they see it, of course they will not buy at the high side, because retail investor always like to park their shares at the lower price. So that's where the big boys start to monitor. When the price is at the high side, they will start to monitor, is there any of these retail investor orders are coming in and parking at the lower price. And one of the common way that they attract or indirectly guiding this retail investor to park the price park their orders at a certain price, is that they will park a huge buy order at a certain price that let the retail investor think that this price is a support, because they will see like, wow, there's a lot of buy order parking there, so they immediately thought this is a support. So what they would think is that the retail investor will park at one price higher than the huge buy order part. So they start to monitor and see when there's enough of retail investor orders coming into that stocks, that's where they throw their price down. So that's where they take the partial profit. And then once they see there's not enough of retailer anymore, that's where they start to push the price up higher again. So now you know that they are pressing the price down because they are taking profit. So can you say at that point it's still a support? Well, some of you might say because retail investor is going in at that point. So that's why that is the support. But the problem is the person who actually can mark up the price is the big boys, because they have the funds, they have the shares to actually do all this market making and move the price. Can we do that as an investor? Yes, can, but every one of us, we have a different value or the price as the lowest price or even the target price. So we won't be moving in to push the price up higher. So other than the big boys can do, because once their fund actually comes in, they buy and then the price will move up higher. So that's why you can't say the previous low is actually the current support. Okay, so that is the reason why I don't look into this. Okay, then the resistance, same goes to the resistance as well. If let's say the big boys, they push the price up higher, at that point they start to find there are buyers coming in, that's why they want to throw the price down lower. But when the big boys, they have distributed like about 80% of their shares on the way up, so left 20% at the high side. So if let's say they have not much shares left, they already taken majority of their profit, resistance breakout doesn't really show any good sign that is telling you that the price will continue to move up higher, because up until the end of the day, we still need to look back into the big boys method. Okay, what is their intention, whether they want to push the price up higher. All right. Okay, so right now I'm going to show you some of the examples, but of course, these are for the examples that have already the price already run up higher. What I'm going to show you is how they actually do their accumulation, so you can have a look into it. So I'm not going to show you guys what is the stock name and stuff like that, because this is for education purpose only. So you know, we are not allowed to actually share our opinions, because to avoid, you know, some people, they will take it as an advice. All right, so I don't advise you. Okay, these are just sharing from my from what I find. So because I'm not your advisor, you haven't really appointed me as an advisor, so I can't do that. All right, so I'll show you guys. Okay, so any one of you want to catch this kind of stocks? The price actually from the low of 46 over cents up to 1 ringgit in just like, within probably 1 or 2 weeks time. So this is something that is every one of us want to catch. But before we want to catch this, because most of the time when you enter, probably when you see the price is already at high side. So this might happen in the Chinese New Year time. So you will see a lot of all these stocks that they suddenly push up higher, which we find there are a few stocks, they are starting to get ready to push the price up higher. Okay, so what is the reason behind why do they do that? I would say maybe some people, they jokingly say, it's a joke that say that, because, well, the authority part, there's a lot of people take long leave, so that's why no one is looking into the market and such thing. All right, so I don't believe that, but it's a joke, so we just laugh about it. Okay, so how do we know about this? The first thing is we need to know how to look into their accumulation. So you can see usually accumulation part, you won't notice it. Why? Because it's not liquid. So you can see these stocks over here, the price before that is not liquid. Sometimes fly up, sometimes fly down, sometimes it can gap up, sometimes it can gap down. Okay, but when it comes to a certain point that you start to see the price actually start to push up higher, you can see there's a lot of all this a cool down period. So these are the accumulation point. So they will try to make sure this accumulation is done quietly. All right, they would not allow anyone to notice about it, and most of the retail investors would not take note about this. Okay, so if you go through the whole list of stocks, you will find that there's a lot of this kind of price movement in the market, and you will find it surprised, okay, how easy to actually see their accumulation, right? So wait, let me see. I see there's a comment here, but I can't see it. Follower pop up. Let's see. Sorry, this is my second time using the live stream. Okay, let's see. I understand. Okay, never mind. Let me check again later on, because I have to look into this as well. Okay, so come back to this. All right, where was I? Yeah, so most of the time they do this, all right, but the accumulation, sometimes it doesn't really have a fixed time. Sometimes they do the accumulation because the big boys, they are big boys, so they can actually hold the share for a very long time. But for us, we have limited fund. So when we have limited fund, we can't hold together with them. We don't want to get ourselves stuck in a stocks for too long time. So that's why the best thing for us is to first you need to identify the big boys accumulation like here, all right? So they have done their accumulation, and then we need to know when are they going to have a housewarming. Why I call it housewarming? Because when they are doing accumulation, that's why I call it a moving house, because you are moving from one side to another side. Okay, so like sending out the shares. Okay, it's transacting the shares to a different person. So once they have done the moving house, then we wait for their housewarming. So we need to take note of their housewarming here. So one of the things I saw that easiest way for every one of you is to wait for the resistance breakout, but I don't like to wait for that because that is too late. Any resistance breakout, any of the traditional analysis that you are looking into it, or indicators you use it to time your entry, is too late for you to look into it. Okay, it's too late for entry. All right, I wouldn't say it's too late, but look at this. If let's say you wait for the resistance breakout, it's at this point over here, probably the price closing at 60 cents. So 60 cents, you might think like, wow, it's too high for you to enter. Okay, so you won't dare to enter into it, but the price continue to move up to 1 ringgit plus. All right, so at this point over here, you can see one of the things I always say, like when they do the accumulation, they will push the price up higher and then they will press it down immediately. Okay, once they transfer the shares, then they will press the price down immediately, and then they wait for some time, 1 or 2 months at least, and then they do the transaction again, and then they press it down immediately. So they don't want to get so much of attention and activity. So that's why you will not notice this in the top active list or any active list in the market. That's why last time I need to go through the whole list of KLSE to find out which are the stocks that have the accumulation. All right. So once we see that they don't really press back down to there, then we know that, okay, the housewarming is here, so it's time for us to enter. All right, so we have our own entry rules to look into it. Okay, so entry rules, of course, before we apply the entry rules, we need to make sure that our accumulation is done. So if let's say there are no accumulation, then we can't look into it. Okay, so then the next thing, once they have the housewarming, entry rules actually start to come in, and then the price push out higher. Okay, so if let's say you miss this round of price push up, okay, don't enter later on, because the big boys usually what they will do is that if let's say they push up fast, some like these stocks over here, they push up fast, they will do their distribution or take profit after that. So that's why you can see the price keep going down and down and down. All right, why is that? Why do they have to do it here, since they already mark up the price to the higher point? The reason is because if let's say you are the big boys, okay, you have to think of both sides. The market is about the big boys making money from a retail investor. So the retail investor, you need to understand retail investor mindset, which every one of us will understand that, because that is us. Okay, we are the retail investor, and then the big boys mindset as well. Okay, so from here, if let's say the price got pushed up fast, you as a retail investor, will you dare to enter into these stocks? No, because you think that it's too high for you to enter. Then probably you think like, okay, I'll wait for it to have a retrace first. So after retrace, then you enter into it. Then you expect it to move up higher. Given that there's a different kind of news coming out from the market, rumors as well, because such price spiked up in such a short period of time, definitely the news will cover it, and then a lot of people look into this company, so they got their attention, they have the spotlight right now. So you saw these stocks, and then they start to publish some of the news or good financial report, or have some people talking good about it, or have some people spreading their rumors about this stock, how good is it, the price will double in 2 to 3 months time, and then usually it's this kind of rumors. All right, so then you will enter into it later on when the price is down. But this is the stage where they distribute, because at the point when they mark up the price with such a short timing, it's not able to attract retail investors to come in to buy, which means that they can't take profit, right? So if they can't take profit, what do? Then they take profit at this point. So once in a while, they push back up the price, and then you can see they throw down slowly here. Why? Because they cannot throw it down like the previous time. They cannot have a sharp drop in price, Because if let's say the price are dropped drastically, very sharp drop from there, then retail investor will start to feel fear. When you start to feel fear, you will not buy it and you will not hold it, you will cut loss. So what they do here is that they will go down bit by bit every day. So they will also still push up, mark up the price so that you have a bit of confidence and then you will continue to hold. That's because retail investor is fine with every day giving them one cut. So they slowly get cut. As long as they stay alive, then it's fine. Instead of going as an instant death where the price start to throw it down fast. Okay, so this is how they distribute their shares. So you have to be careful. Of course, what I'm sharing here today is how they do the accumulation, how they push out the price. I need to let you know how they distribute as well. Because if let's say you do not know how they distribute and then you enter into it later on, it's dangerous. You get yourself stuck in that stock. You can see, if let's say you enter at this point here, which is 90 over cents, it dropped back to 40 over cents. All right, so probably you need to wait for, this was 2018 when they push up the price. So you need to wait for like about 3 years later when the price start to move back up higher again. So within that 3 years, you start your price at that point. Of course, when the price move up higher, you might not exit as well because you will start to think like finally, the God has here listened to my colleague. I don't know how you call it that way. All right. So the price start to move up higher, then you continue to hold. All right. So no. Okay. So you can see their operation. This stocks wise is if let's say you start into this, it's lucky. Why? Because it's quite a close timing where 2018 they start one operation and then later on around 2021, okay, they do another round of operation. So some of the stock they wait for maybe longer than 3 years or 5 years. So our objective as a trader in the market is we need to keep our funds or our capital rolling, our money rolling. Let them work harder for us, okay? So it's not just place inside there and then wait for the chance. Okay, we are not gambling, all right? Only gambler looking at the charts. That's why a lot of people will always like to ask about the probability. What is your probability of winning, rate of winning, about your strategies and stuff like that. All right. Usually I don't look into it. Why? Because it's I find there's no relation. I won't say there's no relation to it, but it's not the main thing that we should look into it. Okay. The probability is not the main thing that we want to look into it. The main thing we want to look into is the profitability, because if let's say you have a probability of 9 winning trades out of like maybe like 10, you have 1 winning trade. So which means that if let's say each trade, because a lot of retail investors, what you guys like to do is you like to set a profit target. You think like, okay, every trade you make like maybe 200 ringgit, 200 ringgit, 200 ringgit. Okay, so you can be very disciplined into your take profit, but when it comes to cut losses, you are not disciplined about it, because you will think that if let's say you cut right now, then you lose hope. You have no hope to gain back your profit or get back your returns. Okay, so let's say 9 trades, you are making, each trade you are making 200 ringgit. So 9 will be 1,800. But the last trade that you are losing, you are still open to it. You have not cut loss, and the losses goes down to losing 2,000 ringgit. So at the end of the day, you're still losing 200 ringgit. Okay, so it's not much about the probability. It's more about how you understand the market and how we can reduce our risk. So I would like to share the risk management here, but one thing is that when I share about risk management, not many people would like to listen about it. Okay, I will get very low view rate when I share about risk management. You can look into my YouTube channel. Yeah, most of you from my YouTube channel and also Facebook page. You can look at our YouTube channel. When I talk about risk management, no one like to, the view is very little. Okay, so but when I talk about like day trading side, a lot of people would like to look into it because they will find it, wow, very exciting. They want to look into it and stuff like that. Okay, so but risk management is part of it. Okay, I would not say it's the most important, but it's part of it, and it's the first steps that you need to understand before you invest into a stock market or you trade in the stock market. All right, because first thing, we need to make sure we ourselves how to protect ourselves, okay, before we know how to make profit. Like in my days, my teachers or lecturers, they always like to use this example. When you learn judo, when you learn any martial art, the first thing you need to learn is how to fall, okay, how to how to let someone punch you. All right, so it's the same in the stock market. So if you understand about stock market, you understand a lot about human behavior, emotions, and then how this why we human is so difficult to change our emotion and be a robot and stuff like that. Okay, and that is the reason why there's a lot of people, they can't achieve a lot of things in the they can't achieve consistent profit in the stock market because there's no there's no risk management. They do not know how to protect themselves. Okay, so come to this example over here, same thing. So you can see before they move the price up higher, it's not liquid before that, and then they have this thing again, price push up, press down, push up, press down. But I'm not saying that it shouldn't be a V shape. Okay, it should be a U shape. All right, so you can find a few examples. You can try to look into it. So I'm not going to give you the fish here today, so I want you guys to find the fish for me. So if you find it, you can share it in under in the comments, so I can look into it and see. All right, so sharing a bit. Okay, so this Chinese New Year, there are some of the stock now looking into this. Okay, so you can see after their moving house, they start to have their housewarming. So their moving house point is about, the price is about like 18 cents. Okay, don't worry or don't think about how much is the big boys cost. Okay, the big boys cost is their problem. Okay, they have to manage their costs. What our objective is, that our intention is to actually ride along with them and then make the profit. Okay, so you don't have to know how much is their cost. Some people would think that, okay, we have roughly calculate what is the cost of the big boys and stuff like that. So if you look into it, that is the cost. You can't use their cost as a support. Why? Because this is their cost. When they sell off their shares on the way up, do you think the cost is still there? Will they actually buy back at that point? No. Okay, same thing. All right. So the cost in later on, if let's say they want to do another accumulation, they can buy at a different price. So don't care about how much is their cost. All right. So that is not important. So what we need to know is, when are they going to push the price up higher? That is the most important thing that we need to know. All right. So after they have done their accumulation, if let's say you do not know how to see the moving the housewarming, which I say that they are ready to push the price up higher, you can still use the resistance breakout, okay, which I don't really like to look into it because it's always late. All right, so you can use that, and then slowly when the price pushing up higher, then you can try to take profit. Okay, so the take profit part, that one wise I need to actually share is, I'm not sure how to share it to you guys, because usually I share this take exit rules. I call it exit rules. I won't call it take profit target because I don't set the target there. The reason is because if you set a target, that is your own expectation. You are not following the big boss. Okay, so for cut loss point wise, I don't really have a fixed how many percentage of cut loss, but instead I have done my risk management properly. I know my position sizing, so I know each of the price tick that is dropped, how much of the losses that I'm going to incur, which is very minimum to my capital, and then I still have my cut loss point, but I call it the cut loss rules and also the exit rules. Why? Because it's not fixed. There's no fixed percentage into it. So it's always based on different stocks and different probably have a different cut loss point. Okay, because the cut loss point, I'm not just you looking at the price going down. I'm also looking at the volume as well. If let's say the price don't goes down and then the volume is fulfill my cut loss rules, then I'll exit. So that way actually helped me to actually exit nearer to my break even point. Okay, so I don't have to cut loss that much. So that is also one of the way how I minimize my losses. Okay, so that's why last year our round and search portfolio, okay, it's not traded by me, but I share it to them. All right, so they have achieved about 30 point something percent. Okay, 30.53%, I guess. Okay, looking back into last year, that was a very bad year where a lot of people actually lose a lot of money from in the stock market. Even index is down, SCAP is down, ACE market is down, but we are still able to secure a 30% profit from it. Why? Because first thing, of course, the risk management. Second thing is because we know how to see the big boys transaction data is. So when you know that, that's the point. The first quarter and the almost second quarter, we almost at the beginning of second quarter, almost at the end of first quarter, we start to see the most of the big boys or most of the stocks, they are attracting buyers, pushing up the price, mark up the price to attract the buyers to come in. So this is normal if let's say there are only one or two a few big boys are doing that, because maybe big boys A, they have done their price markup and then it's time for them to exit, so that's why they are attracting buyers. B, just started accumulation, so if let's say one or two in the market, then it's fine because that is normal, because that is how their operation is, right? But if you see most of the big boys in the market are doing this, then you know that the market is going to be bad for the next few months, okay, for the next coming month, because they right now, because when they push the price up higher, at that point the market was very good. Okay, why? Not why, okay, but the market was very good, so the retail investors are very confident about it in the market. So that is the time where they can distribute the most shares in the stock market. Okay, if they wait until when the market is bad, you are not buying, who are they going to sell it to? So that's why they have to sell it before the market is bad. All right, so if let's say you know how to understand how the big boys work in the stock market, then you would know, you will roughly know the whole market, how is it going to be for the next coming 1 or 2 months, so you can avoid going into the stocks. And even when all the big boys are throwing down their shares, there's no stocks that actually trigger any entry signal, or there's no stock that's showing us that the big boys are doing any accumulation. At that time, even those big boys that they have done their accumulation, they stop their operation. They're not going to push the price up higher. So they wait for, why? Because they have to wait for the good timing wise, when the market comes back up and then the investor confidence come back in again. So that's where they can mark up to distribute. When they mark up during the bad market time, no one is going to buy from them. So at the end of the day, end up they have to keep on churning their volume. Okay, keep on churning and churning and churning, and then using the limit. If let's say there's a limit cut, then the price will fall. Okay, so yeah, these are some of the way that they have done their accumulation. So what I'm going to share you here is some of the stocks. Okay, I'm going to show you roughly how they do it. So just now I show you roughly how they do it just now. So you guys have to look into it and find it. Okay, so this is something looks like they are having some movement coming soon. Okay, for this stock. So they have done their accumulations, quietly do their accumulation. So here is where the market start to be bad. They wanted to push the price up higher, then the market is bad. So at this point over here, they can't distribute their shares because there's not enough buyers to buy from them. And then even right now, there's not much of retail investor have gained back the confidence to come back into the market yet. So that's why is they have not done selling all their shares. So they need to push one round up again. So maybe CNY time is the time that they want to move the price up higher. Okay, then second one will be here. So this is another stocks that you can see. Okay, so if I never tell you this, you will not notice this kind of stocks, right? So because it's not liquid, so you think like you sure or not can win this kind of stocks, and you can look into it. Well, you can look back into some of our sharing last time. Of course, we actually didn't show the stock code. Okay, so to avoid unnecessary what do you call that, the authority side. Okay, so that's why you can see, okay, along the way, we like last year how we actually achieved still maintain 30% of the return here is because last year first quarter, first month of the trading day, we are able to achieve like 100%, one stock, one trade, 100%, 100 over plus percent return. And then second one actually about like 50% return from it. Okay, that stock itself. So that's why it's important for us to know how these big boys they do their accumulation. All right, if you do not know how to do how they do their accumulation, then if you are using a traditional way, that's why you still see a lot of people still struggling in the market where they cannot achieve consistent profit in the stock market. All right, so because you see technical analysis, how they share it to you, how they look into the market is about talking that whole market have the power to move the price. But in fact, that is the whole market that can move the price. That is more of like an academics kind of theory, kind of thesis that they would write, because academics is trying to build a world that is perfect. But we know when it comes into greed and fear and human emotion, all this is not, in reality, it's not like that. Okay, so that's why in reality is we know there's a big voice there, so we need to follow it. Okay, like for example, they will do a lot of things to actually move the price. I heard this story. So this story is actually I heard from one of this market, not to say market maker, but more like an advisor in Hong Kong. Okay, that is a Hong Kong stocks. So what they did was the company itself actually have money, but they want to create some bad news so that the price can actually go down lower, so that they can buy at the lower point and then push it up higher again. So they approached a few big banks to ask for loans. All right, so they asked for the very huge amount of loan that the bank would definitely reject them. So they did that, and then as they planned, the banks rejected their loan, and then they came out with a news conference, and then saying that, oh, okay, the bank rejected our loan, and then we have not enough funds, okay, to actually move the to actually not enough funds, okay, for the business. So that's where the stock price actually start to go down lower. Okay, what I'm saying here is the story from Hong Kong. All right, so when the price goes down lower, everyone's selling it down. So that's where for maybe the owner or maybe director or substantial shareholder, they start to buy at the lower point. So when they start to buy the lower point, and then another company that is indirectly controlled by them injected or invested into that listed company. So they came out from a news conference, and then the price started to push up again. So that's how they make profit from the stock market. So that is more of in Hong Kong or maybe US, you see a lot of this kind of price movement. In Malaysia wise, we don't really have that because their volume is really huge. So their big boys have different way of playing in the stock market. Okay. All right. I have a question here. What stock is this? I'm not going to share. Should I share the stock name? Because like I said, all right. If let's say I share it out, then probably that is some advisory issue. Okay, so you can PM us later. All right, because I can only share this kind of stocks code out to my own client. Okay, so some of my clients open a trading account with me, so I can share it to them. I'm licensed to do that, but to public, sorry about it. Okay, but I just want to share with you guys how this thing is work. Okay, so we can have a look into it. So yeah, or maybe you can look through the 1,000 list of stocks. Trust me, you don't have to take very long time to find all of it. Okay, so this is how the big boys actually works, and this is the true nature of the stock market. So that is why I want to um, I want to I want to share it to you guys here. All right, so this is how they do accumulation. Of course, if let's say you want to know more about it, we have our training course as well. So it's a 6-month training course. So for the whole 6 months, what we'll do is that I will actually share with you, starting from risk management, punching all, how we do the risk management, position sizing, make sure you remember it, doing the entries, how is the entry rules, in what kind of circumstances you should apply the exit rules, in what kind of circumstances you should apply the cut loss rules that we have, and understanding the big boys, how does the big boys price movement is. Most importantly, of course, you will learn how to do this accumulation. Okay, how to see that the big boys accumulation. Okay, so it's a 6-month course, so we're going to punch you on this, okay, to let you understand the whole thing. Of course, in this course, there will be a day trading course as well. If let's say you open a trading account with me, then you can actually attend for the day trading, the pre-open market trading course. Okay, so that one wise, I'll do it live with you, how to make profit within in the morning. Okay, probably after market open within five minutes, then you can make a profit from it. So if you want to know more about this pre-open market, if let's say you're watching this from YouTube, or if let's say you're watching this from Facebook, go to our YouTube channel, go to a day trading list, and then you can find out how we work on it. Okay, so it's very interesting. So before the market open, 5 seconds before it, then we enter into a trade, and then the price will start to move up higher for 5 minutes, and then we can take profit and run. Okay, so that is how we look into it. And of course, in the day trading side, we will also have like those stocks that is going down, so we can spot the support, okay, the low point where they will have a small price up. That's where we can make profit from it. All right, so yeah, so the next training course will be on March, okay, 8th of March, if I'm not mistaken. Sorry, 5th of March. 5th of March, starting on 5th of March. So that is a March intake. And after March intake, I have to say that our training course, there will be a price adjustment to a higher point. Why? Because our software collaboration, our partner, they are going to adjust the price. So we have no choice but to adjust higher for our training cost. So if you want to actually take this opportunity to sign up our course, all right, so you can go to the description link, and then there's a link there about the operator analysis inside. So click on the link, and then you'll see the whole explanation from it, and also the course guide from it. Okay, all right, so yeah, so that is my sharing here today. Let's see, any one of you have any questions that you want to ask about the stock market? Okay, stock wise, I cannot advise to you guys. All right, I'm not like other YouTube site where they can share. Of course, maybe some of them, they have already drink coffee a lot of times in SC site. Let's see. So basically, we have like 2 stocks that we find it's very interesting. Oh, there's another one, very interesting one, this is about 1 ringgit plus. Is this one here? Yeah. So just started moving up higher. The volume is not that high. So you can see previously it's not liquid. So it's the same thing again, same price movement again, like I shared to you guys. Right? So this is how day 1 of it. Okay. remember this, okay? You can pause the video and then see how the price movement is, and then remember this, and then do your homework, and then look into the stock, into the market, see any of it actually fulfill this kind of price movement. Okay. All right, so I don't see any comments are coming in, so I think that's it here for today. All right, so thank you very much for joining our live stream session. So if let's say you have any topics that you would like us to cover, please leave a comment. And if you find this content that is helpful, or some of your friends need to know about this knowledge about the stock market that I share with you guys, all right, share it to them. All right, share it in your timeline, share the link to them. Okay, we need to share more of this the right way to invest or trade in the stock market to more people to realize about this. Okay, one of my intention is to, I want to my dream, okay, is to make everyone to actually make profit from the stock market and understand how the stock market actually works. All right, okay, so thank you very much and happy Chinese New Year to every one of you. I'm gonna see you guys again after Chinese New Year. And if let's say you are going back to your hometown, please drive safe. And of course, right now pandemic still going on, there's still a lot of virus going on, so make sure your safety, everything is done properly. All right, so thank you very much. See you guys again next time. Bye-bye.
Traders react to the